Are you an expert in your field?
Do you want your voice to be heard?
Maybe you have a great idea for a show but don't know how to do it.
Well, we can make it happen.
Email the New Jersey Podcast Guys at NJPodcastGuys@gmail.com. If you're looking to buy or sell a home in New Jersey, contact our Coldwell Banker office in Wayne at 973-694-8000 or call Tim direct at 973-865-0249. You can also visit his website at www.homesinwaynenj.com. Tim's promise to you and your family is to provide you with exceptional real estate service while always working to exceed your expectations. And remember, at Coldwell Banker, we never stop moving.
Welcome to the New Jersey Real Estate Show. Now, here are your hosts, Tim Waller and Matt Joseph.
Hello, everyone, and welcome to the New Jersey Real Estate Show. I'm Tim Waller, your host, and sitting to my immediate left is my co-host, Matt Joseph.
How you doing today, Tim?
I'm doing wonderful, Matt. I woke up this morning. Anyway, Matt is also known as the voice of reason.
Yes.
Matt, we have a great show lined up for our listeners today.
We always do.
Yes, we're going to be discussing how real estate investors can quickly and efficiently finance their real estate acquisitions and rehabs. Our in-house guest today is Fred Shatzoff from Everest Business Capital. Fred currently resides in New Milford with his best friend Frosty. That's his dog. He's a 1979 graduate of William Patterson University and has a degree in accounting. Since 1989, he's been in the lending business. Most of that time was spent in the mortgage business. And I remember that. I used to do business with Freddie way back then. Fred is an expert in FHA, VA, and first-time financing. He has always been a top producer. For the last 2 years, he has spent working as an account executive with Everest Business Capital. His specialty now is in alternative financing and private financing, and the main focus is helping real estate investors with bridge financing in their purchases, renovations on both single-family and mixed-use properties. Fred is also the past president of Wayne Rotary, past president of the Wayne JCs, and past president of the Wanacue JCs. Have you also past president of the United States?
Not yet. I'm not ready to run for that position. I'll let Mr. Trump take it.
Yeah. He is also a JC senator, Paul Harris Fellow Award recipient, and a Walter Head recipient. So let's talk a little bit about Everest Business Capital. They're a private hard money lender founded in 2010. Is that correct?
Yes, it is.
Okay, and their mission is to help real estate investors quickly and efficiently finance their acquisition and rehabs. Since August 2016, they have funded over 850 projects and provided $185 million in loans. They can also close your loan within 15 business days. Fred, welcome to the show.
Thank you. It's a pleasure to be here. It's great to see you again, Tim.
Yes, thank you very much. Just, don't say too many things. I want to keep some of that stuff still in the closet.
Okay,
just kidding.
In the closet.
Okay. Can you please explain? Can you please explain to our listeners what's the definition of hard money, and where did it get its name from?
The definition of hard money is where it's a little more difficult than a non-traditional type of loan that someone wants to get, specifically using it to buy a piece of real estate that needs some renovations. As an example, let's say you found a piece of property in Jersey City and you're going to buy it at $100,000 and it's going to cost you $50,000 to renovate it, and the property is worth $190,000. Okay, we would get you 90% of the as-is value, and we would get you 100% of the money for the rehab. We're going to give you the money in two stages. First, we're going to give you the money to close. We'll get you pre-approved within 24 to 48 hours. We'll get you the money within 15 business days. We're going to give you the money for up to 1 year. It's going to be an interest-only loan. Rates are going to vary based upon your experience. If you're a brand new investor, your rate is going to be a little bit higher. But if you're a seasoned investor, you will get a better rate as far as that's concerned.
Describe a higher rate and lower rate.
Sure.
Because this isn't conventional financing, correct?
That's correct. It's not conventional financing. So rates are typically going to range anywhere from about 7.5% to 14%, but it's interest only. So you're not paying a full mortgage payment. The 7.5% is going to go to the seasoned investor, documentation is relatively light. Because if you go for a regular mortgage, they want to see W-2s, pay stubs, bank statements, things along those lines. The most documentation we're going to require is 3 months bank statements and last year's tax return. Some of the programs require a full appraisal. Some only require a broker price opinion. And these loans can close in 15 days.
Well, let me ask you this, Fred. I just got a brain block, but that's okay.
That
That happens
I have
a
a
lot.
question if you want.
Yeah, please,
Okay.
please, Matt. Thank
All right,
you.
so
that was planned, by the
just
way.
just to clarify, though, so it's called hard money.
That is correct.
Because there is a higher risk for you guys. Is that right?
There's a higher risk.
Okay, and then also it's you're going to get approved and get the money in your hands in a very short amount of time with very little proof of whatever you need proof of.
Proof of income.
Of income,
correct.
yeah.
And they're just to let you know, they're very liberal as far as credit is concerned.
Okay.
One particular lender, you can have a credit score of 550. Another lender has no credit score requirements. So if someone was a year out of bankruptcy and wanted to buy a property and fix it up, we could probably get them the money. We're going to look at the circumstances and we're going to use some common sense underwriting.
Okay.
The other one that has the 550 is a little more strict, but again, that one. So what we do is we take a look at the situation and we see which program to put your buyer into and which is going to work best for them.
Okay.
All right, so let me give you an example. Matt, he found a house, and he's going to rehab it.
Okay.
Okay, so he's going to buy it for $150.
Okay.
His cost to rehab is going to be about $75.
Okay.
After it's all said and done and fixed up, it's going to be worth $350.
Okay.
So you're going to loan the money based on what value?
I'm going to loan it based upon what the current value is right now, which would. So if he's buying
It's as is condition.
As is condition, we're going to give up to 90%, and then we're going to give 100% for the rehab.
Gotcha. Okay, so he only has to his out of pocket then is 10%.
Right, his out of pocket is 10%.
Right,
correct.
Okay, what kind of credit score do you need in order to get this money?
If he has a 550 and above, he's going to be able to get this money as long as there are no lates. Just to give you an example, what we're going to be looking for as far as credit, it's pretty simple. We just want to see. Hold on, let me just take a look. There has to be no more than 4 60-day lates on either their installment or their mortgage. No derogatory public records in the last 2 years, such as a bankruptcy, foreclosure, short sale. No felony convictions in the last 7 years. No unresolved judgments or liens greater than $10,000, and no financial fraud ever. Now, if they did have a bankruptcy in the last few years, then we can go to another lender that doesn't care. They don't have a credit score, so we have flexibility as far as a couple of different private investors to go with.
Okay.
So what we do is we look at the situation.
So why would somebody who is going to buy a house, let's say, why would I come to a hard money lender as opposed to, I guess, what do they call it, a soft money lender?
Right, because if you go to your traditional bank or you go to your traditional mortgage lender, they're not going to lend you the money. They're not going to do these particular products. Okay. In addition to that, we only require 3 months bank statements and last year's tax return.
So
we just want to see that they have the reserves. We're not looking at income.
So it's what you want to use the money for that makes the difference.
Right. It's what you're going to use it for because you're using it to fix and flip, and we're lending you money to rehab this house.
So based on a worst case scenario, the 14%, we borrowed from you $200,000.
Correct.
It's interest only.
That is correct.
What would on $200,000? You don't have to be exact, but what would the monthly payment be?
Let's see, $200,000 on 14%. Who's got a calculator?
Here.
Okay.
You got it? What is it? $0. $0.
No, I didn't do anything.
Oh.
Okay.
All right. So we're doing the math right now.
We're doing the math right now, and let's hear the drum roll.
Yes, and
It's going to be about $2,800
A month.
a month.
Ay vey. Okay. So then, now wait. So I'm sorry. I have another question now. It's so, let's say I get the house, I rehab it, and then the idea is that I'm going to turn around and sell it right away, right?
Right. That's the idea.
Okay. And so then, but while I'm rehabbing, I'm making those payments.
That's correct.
You're making payments $2,800 a month, so you better rehab it quick.
Right. So
sell it quick.
You're going to make payments while you're rehabbing it. And obviously, they're going to give you up to 1 year to pay it off. 1 year to sell it.
All right. Okay. I get it.
I mean, you could also turn around and put a permanent mortgage on it, too. Decide, you know what? I think I'm going to keep this house. I think it's going to have good cash flow. Then you can go to a regular traditional bank and you can get financing for it.
Okay.
So what we're doing is we're the short-term lender to help get you the financing to fix up the house. That's what we are.
So, okay. All right. I got it. Yeah.
So, Fred, what about people who are self-employed?
That's not a problem.
Do they have to show X amount of income in order to qualify for that money?
No, we're not concerned with income.
You're only concerned with that you have the 10% down?
Right, you have the 10% down, and then you have 3 to 6 months worth of cash reserves in the bank.
Right.
There is no seasoning. So if you just deposited a large amount of money in the bank just to show
you don't have to
reserve,
source those funds.
You don't have to source it, which is a beautiful thing.
Right. Okay. Let me ask you this. What's the difference then between the hard money financing and conventional financing? So why would someone go to you opposed to going the conventional route when interest rates are like 3.75%? And I'm not trying to give you a hard time. I'm only playing devil's advocate.
That's fine. The reason they would go to us is, maybe they go to a conventional lender. Maybe they don't have good enough credit to qualify for a regular mortgage. That's number one. Number two, they go for a regular mortgage. They're going to have to show W-2s, tax returns.
So for the self-employed, this program better suits them because
correct.
If they're not showing or not paying taxes, they're not getting a conventional financing.
Right, correct. Let alone they're also going to get an interest-only product, and they're going to be able to close in 15 days. Because if you go to your regular lender, it's going to be probably about 60 days before you close.
Now, what's the closing costs? Are there points involved?
There are going to be some points. Typical points are going to be 3 to 4% of the loan amount.
So you borrow $200, you're paying $6,000 to $8,000.
Correct.
That's pretty good with my math, huh?
Very good with your math. Okay. And one of the programs just requires a broker price opinion.
A BPO. That's known as a BPO. Peter Cornell, you up over there? BPO. Did you hear that?
Don't forget.
BPO.
Obviously they're going to have their regular title and things along those lines, but they're not going to have any tax escrow. They're going to have to show proof of insurance. Obviously, they're going to want that because, God forbid, something happens while they're rehabbing. They don't want to have any risk.
Right.
So will you lend money to individual business owners, LLCs, corporations, or the individual self-employed? I guess the answer to that is...
The answer is yes.
Right.
Okay. But we can do both. We can do an LLC or we can do an individual.
But they still have to pay that back quickly.
Right. They still have to pay it back. Correct.
Right. I mean, I know they have to pay it back, but I mean, you still are going to want them to pay that back within a year.
Right.
So so whatever they're using it for has got to be something that's going to increase their income.
Correct.
Rather quickly.
Right. I mean, we can get an exception and we can get a 6-month extension if need be.
Okay.
Okay. So in other words, Peter, our engineer, takes the loan.
Correct.
He's at 14%. He's borrowing $300,000. He's paid 4 points, so he's paid $12,000 right up front.
Correct.
Okay. He holds on to it for 6 months. So when he closes or goes to pay you back, he still owes the principal amount that he borrowed.
That's correct. Right. So obviously, you've got to take all that into a factor and determine and say, okay, by the time I finish up this house, what is this house going to be worth? Is it going to be worth it for me to spend all this money and do this fix and flip?
Right. So give us an example of someone who's utilized your type of financing, hard money financing, and a few success stories. You have a few success stories?
Sure, I actually do. Here's someone that we did a loan for. They bought this property in Asbury Park. They were an experienced investor.
Right.
The purchase price was $311,000. They determined it was going to cost them $110,000 to do the renovations. We gave them $356,000. We gave them a 12-month interest-only loan. After repairs, the house was worth $550,000.
Nice.
Okay? So, again, they were an experienced investor, and
So they were at the 7.5%.
yep, they were at the 7 to 7.5%. The work that they did on this house was a new air conditioning system, all new floorings throughout, updated the drywall, the insulation, new appliances, and he also was restoring the front porch on the second floor deck. So you can see, even though it cost them quite a bit of money as far as interest, there was a large enough profit there
Right.
that it made it worthwhile.
Sure.
So, those are the areas where we can actually help people.
Just listening to this makes me nervous. though.
Well, let me ask you another question. If you don't pay it back, your legs get broken.
Well, that's what it sounds
We're going to send Tony. We're going to send Tony Soprano over there.
Okay. I just wanted to clarify that. Did you hear that, Peter? Okay, that woke you up, didn't it? Yeah, it did. Okay. All right. Well, listen, I just got notified by our engineer, Mr. Cornell, that we've reached the midpoint of our episode. So the New Jersey Real Estate Show will return after a few words from our sponsors.
The New Jersey Real Estate Show is brought to you by the law offices of Joseph C. Petriello, located in Wayne, New Jersey. To contact them, call 973-890-7262. That's 973-890-7262. Are you purchasing or refinancing a home? Do you need a free same-day pre-approval? Then call Dean Scaduto from Coldwell Banker Home Loans at 201-322-3456. That's 201-322-3456.
Welcome back to the New Jersey Real Estate Show. We're here with Fred Shatzoff from Everest Business Capital, discussing how real estate investors can quickly and efficiently finance their real estate acquisitions and rehab. Fred, during a break, we talked about a program that you wanted to talk about, unsecured line of credit.
That's correct. This is for a borrower who has a 700 credit score and above. Okay, they can get lines of credit anywhere from $50,000 up to $250,000. Okay, they can get a 0% interest for 12 to 18 months. We can get them pre-approved in 24 to 48 hours, get them funded within 7 to 10 days. There we don't require any proof of income. Okay, we don't.
How about citizenship?
They do have to be a U.S. citizen,
Okay.
or they do have to have a green card.
Okay.
Okay. And the main criteria, besides the 700 score, they cannot have any more than 6 inquiries in the last 6 months on their credit report. The revolving balance on their credit has to be below 30%. They have to have some credit, individual credit with credit limits greater than $5,000. If they had a bankruptcy, it has to be over 10 years. No lates in the last 12 months. A minimum of 3 open trades. 5-year credit history. Now, if they do have a lot of debt, they can pay some of that debt down and still qualify for this particular program.
Okay, now what's the point cost on this program?
Okay, the point cost on that is if we get somebody a $50,000 line of credit, there is a one-time line acquisition cost of 10% of the line amount.
$5,000.
$5,000.
So $100,000, $10,000.
Correct.
$200,000, $20,000.
Right.
So on.
Only, besides the 700 score, the only documentation they need is their driver's license, a utility or a bank statement showing their address, their social security card, and if they're an LLC, we just need to see their articles of incorporation.
Wait, they have to actually have a physical social security card?
Yeah.
Really?
Yeah.
I don't have one.
Oh, I lost mine. Yeah.
You lost it. Okay.
I mean, you can get you can get a new one, right?
You can get a new
Well, it's a
one,
pain in the
right?
neck to do that.
I hope so.
It's
Yeah,
like going to motor vehicle.
Of course it is.
Yeah.
No, actually worse than motor vehicle.
Well, I'll tell you real quick,
It's
Fred.
actually quicker, believe it.
Real quick.
I lost mine, and I had to get one, and I had one within a week.
So how do you prove who you are without your number? I mean, you just say I'm Joe Blow, my number's 1, 2, 3,
Well,
4, 5, 6.
here's what you have to do. If you lost your Social Security card, you can go to the local Social Security office. You bring your driver's license there. You bring one other proof of ID. You fill out a form. They verify that. And within a week, you get your Social Security card.
All right, let me ask you a question about that line of credit.
Right.
Okay.
Mm-hmm.
So, hypothetical, my house is valued at $600.
Okay.
I owe $200 on it.
Mm-hmm.
I want a line of credit from you for $200,000, which is
Okay.
going to cost me $20,000 up front,
Correct.
right?
Correct.
But now I get interest only. I mean, I get 0% payment for a year, you said?
For 12 to 18 months.
Let's call it 18 months. So I don't have to make any payments for 18 months.
You just have to make your minimum payment, 2% of the line amount of what you owe.
2% of the line amount.
So if I
It's $400 a month.
if I get you
Correct?
if I get you 200,000, okay?
All right, that's $400 a month.
Correct.
Okay. Plus 20,000.
Plus 20,000.
Okay, and then I would still owe the principal balance of the 200.
That is correct.
Okay. All right.
And it's not attached to your house, and you can use that money for anything that you want to.
Well, give me an example
Yeah.
of what someone would use that
Right.
for.
I've had some people use it who maybe want to expand their business.
Right.
I've also had some people who want to go out and they want to buy real estate. They're a real estate investor, and they have very good credit. So I would put them in this program. So what I do is when I talk to somebody, obviously I'm going to first evaluate their situation, and I'm going to ask them, do you know what your credit score is? Now, a lot of times people don't, but they can actually get their credit report for $1 from a place called Total Credit Check, and it's a soft inquiry. It will not affect their credit. They send that to us. We take a look at it. We evaluate it. We plug everything into our formula, and we're going to be able to say, Tim, this is how much you're going to be able to qualify for based upon what your credit report is. Do you want to go ahead? If they say they want to go ahead, we fill out all the paperwork. They don't pay us any money until they get the funding for this loan. So they can use the money for anything that they want to.
And that was Total Credit Check?
That is correct.
Is that totalcreditcheck.com?
TotalCreditCheck.com.
For
yes.
$1.
For $1.
Wow.
It gets all three of your bureaus.
So the people that are going to come to you they're like heavy hitters. They're people who are, at least they think they're going to be good at investing in flipping properties and stuff, or they have a track record that proves that they have done that. I mean, what kind of things? Yeah, go ahead.
Or they may be a brand new investor, who does not have any source and does not know where to go for any type of funding.
Okay.
I mean, I get people like that all the time that contact me that are brand new investors.
Okay.
So I can work with them.
So for all your programs, though, you have to be a U.S. citizen.
That is correct. Or you have to have a green card.
Or a green card.
Correct.
Okay. All right. So funding for flipping, which is kind of what we've been discussing.
Correct.
I, as an investor, or Matt or Peter as an investor, we would have to take all those costs and put that on top of our...
On top of your investment to determine is it worth it, or are we going to make
Correct.
the
At
return
the end
on
of the
investment?
day,
Correct.
if we run it out the full 6 months and it takes us 6 months to rehab it, sell it, and close on it, because that's using that $3,000 a month rounded up, that's $36,000. That's $36,000 of profit we're not going to see because we needed that money in order to solidify what we were doing on the flipping.
Right. Correct.
So my point being is that you really have to buy the property at the right price.
Correct. Absolutely. You definitely have to buy the property at the right price. And there are a lot of properties that are out there. It's just a matter of knowing what...
I don't know. I've made some offers on properties, and the agent said to me, hey, pal, why don't you take off the mask and put down the gun? There's no robbery happening today.
Right. So it's a matter of finding the person who really wants to get rid of that property. And, you're getting a good enough profit, and you need to know what you're doing, and you really need to crunch your numbers before you go any further.
And under no way those points are non-negotiable. In other words, on the loan. Securing the loan.
Just to give you an example.
Can you increase the interest rate and go lighter on the points?
there is some flexibility with the points. Absolutely. I mean,
Okay.
if someone hasn't done a lot of business with us, there is flexibility.
Right.
We could certainly do something for.
I'm just saying, can I
points.
say, hey, Fred, instead of paying 3 points and 14%, can I pay 1 point at 17%? Would they work anything out like that if the numbers made sense to them?
If the numbers make sense, yep, there definitely is flexibility as far as that is concerned.
Mm-hmm.
I mean, obviously, someone who is, getting a larger loan amount or who's done a lot of business with us, we're going to work with you. Believe me, we're not looking to, charge you any more, and we want to be very fair because I can tell you that there are a lot of lenders out there. They're going to charge people 5 to 8 points for this particular program. We're not looking to do that. We're looking to work with you. We want to develop a relationship, and we want you to come back to us.
So do you do any type of long-term financing?
That I don't do.
You don't do.
So this is all strictly short-term. So
Okay.
obviously, when I speak to someone, I want to find out what is your exit strategy. Are you going to sell it? Are you going to keep it? If you're going to keep it, do you have someone that you deal with to get the permanent financing? If not, I certainly have plenty of places to recommend where they can go for the permanent financing.
So you're strictly short-term,
Correct.
in and out.
In and out, that's correct.
Okay. Kind of like that recon motto, swift, silent, and deadly.
Exactly.
That's it.
So it's not only a risk for the lender, but it sounds like a risk for everybody all around, right? Like, you don't know it's going to work, and now you're on the hook for whatever you borrowed. You know what I'm saying?
Right. There definitely is risk for everybody.
Sounds really
course.
scary.
Well, the program's not for everybody. And,
Right.
you need to be a seasoned. You need to have somewhat of some experience in determining what are your costs going to be.
Yeah.
Like, to give you an example, I had a guy who called me. He wanted to buy a piece of he wanted to do a fix and flip in Georgia, which was fine. Okay. So in talking to the gentleman, he said, well, I've not seen the house. I said, where are you? Oh, I'm in California. I says, sir, don't you think you ought to see the house before you at least get involved?
Right.
I can tell. I've done this before. I says, but you can't tell from the pictures. People can doctor it up with the pictures. I said, I really think you should get a structural inspection done and physically inspect this, and who's going to do the work and how much is the work going to be? Well, I'm going to do the work. I said, but you're in California. Well, I'm going to fly out there for a few months. I said, you really ought to think about it. Then I further talked to this gentleman, and I said to him, well, how is your credit? Well, it's not so good. I said, do you own or do you rent? He says, well, it's kind of a story. I says, okay, well, what kind of story is it? Well, I own the house, but I haven't made the mortgage payment in 3 years. I said, and you haven't been foreclosed on? He said, no. I said, what is your credit score? It's 700. I said, I really don't think so, sir.
Yeah.
I says, I'm not really sure, that we can help you. So I think that gentleman thought that he was an investor. I mean, if you're going to buy something out of state, you need to really go there and take a look
So
at it.
he's going to invest in the property that he hasn't paid his mortgage on for 3 years and hasn't been to?
No, he's going to buy another piece of property that he wants to fix up and flip.
And
he hasn't paid his mortgage in California.
Right, then he's not. But on the new house, he's not going to pay his mortgage for 3 years.
Yeah.
Right, of course, yeah.
So, I mean,
Well, Fred, let me ask you a question. What's your default percentage? Have you had people that have defaulted?
very low. It's
Very
about,
low.
About 5% have only defaulted with us, which is very low.
Okay. Yeah,
So these people are real players. These aren't.
They know what they're doing.
Yeah,
they know what
exactly.
they're doing exactly.
Yeah.
I mean, and that's
this is like just part of business for them. This is what you do,
it's,
and then
it's
you.
the cost of doing business.
Yeah.
Exactly.
Yeah.
Absolutely.
Man, I wish I had the cojones to do that.
Yeah. Now, just to also let you know, I mean, we do business in a lot of states: New Jersey, New York, Pennsylvania, Connecticut, Massachusetts, Maryland, D.C., Florida, Virginia, Colorado, Georgia, Tennessee, Texas, Washington, West Virginia, Florida, Illinois, Ohio, Mississippi, Montana, and South Carolina. And again, we can get these loans closed.
What states don't you do it in?
Well, I was going to ask if you could repeat that backwards.
Yeah. So we do business in quite a few states.
Yeah.
You know.
Well, that's interesting. I never really. I always heard the term hard money lender, something like that.
Right.
I never knew exactly what it was, but all I knew is that when I had been around people who had some experience with hard money, it made their hair go gray very quickly.
Yeah.
So I was always like,
or they're going to end up
this?
bald like you and I.
Yeah. Exactly.
Are you
I actually grow
insinuating that
a very full afro. I just shave. I choose to shave it this way.
All right, so all those states pretty much the same across the board, 7.5%, 14% for
Correct.
non-experienced.
Correct.
So it's kind of all throughout all those states.
It's pretty much throughout all those states. Yep.
Right. Okay. Anything else you got there for us, Fred? Any other programs or?
That's pretty much it. I mean, we would love to do business.
Well, let me ask you a question. You said if someone needed hard money on a long-term basis, you have people that you'd be able to send them to. Are their rates comparable to yours, or does that vary?
It's going to vary.
Yeah, depending on each individual situation.
Correct.
Depending on their credit score.
Yep.
Their assets, length of time on the job, whether they can substantiate their income or not.
Right.
All
those things are factors.
Compensating factors.
Correct.
I remember that term. Compensating factors.
Right. We'd have to write the begging letter to the underwriter at one time.
I wrote many of those, that's for
Yeah.
sure.
Please help me achieve the American dream.
Well, Fred, we really enjoyed having you on the show.
It was great to be here.
I just got the high sign over there from Peter, our engineer. He makes this show possible. And it was an honor and a pleasure, Freddie.
All right.
Haven't
Thank you.
seen you in a while. It was good seeing you
Good
today.
seeing you as well. Thank you for allowing me to be on the show today.
And we thank you for your valued time and sharing your years of expertise with our listeners today on the topic of financing real estate acquisitions and rehabs. It was extremely informative and insightful. And Fred, what's the best way for our listeners to contact you?
They can contact me either by telephone at 201-648-5037 or via email, fred@everestbusinesscapital.com. In addition to that, if they want to send me an email, we can send them a free report on how to secure funding for your fix and flip real estate. So again, they can send an email to fred@everest, that's EVEREST, businesscapital.com for our free report.
Thanks again, Fred.
Thanks, Fred.
Thank you.
Well, listen, make sure you tune in next week as our call-in guests from the great state of Arizona, Rosie Arredondo and Anthony Rainville from Credit Coach LLC. They'll be discussing with us how to take potential individuals with credit issues and turn them into qualified home buyers. You don't want to miss this episode, folks. As always, we thank you for listening to the New Jersey Real Estate Show, and I leave you with this quote: great leaders aspire to lead and then lead to inspire others. Stay safe, my friends.